Hello and welcome to the Commodity Trade. I'm Pranay Banerjee. The month of December is almost drawing to a close and most global and local event triggers are also behind us. The markets have absorbed the FOMC rate decision and the fifth rate hike there has been undertaken with an outlook of even 3 more rate hikes going ahead into the next year. The other larger central banks, the ECB, the Bank of England and the Bank of Japan have been mostly in line with what the street was expecting, with the Bank of Japan being the recent outcome coming in this week, the 10-year yield target being held constant and also the rate also remaining unchanged, with the stance also broadly in line. While all important local triggers of the Gujarat election also trickled in at the start of this week, let's talk about separate categories. Gold has seen a gradual recovery and has come up to almost a $1,270 per ounce level. While if you take a look at base metals, after quite a sharp correction that we saw in the initial part of this month, we are seeing some kind of gradual clawback come in. The dollar index is roughly stable at levels of 93.5, and crude oil inventory data has suggested consistent draws, and both Brent and WTI are sustaining near recent highs. Let's decode all these trends and get currency as well as commodity strategies, get them going for you. But let's welcome in our first guest for today, Prathamesh Mallya, Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking, joins us live. Prathamesh, always good to have you on the show. Thank you so much for joining in. Let's first start with, the kind of recovery that we are seeing on industrial metals. A gradual clawback is what we are seeing. Do you believe that the near-term bottom has been made and the worst is over?
Pranay, I think it's that time of the year wherein the trading activity would remain weak or lull for that matter, because most of the Western markets would be on leave. So I don't think the bottom is still there, and in all the metals counters, specifically for that matter copper per se or for that zinc per se, I would see possibly all these counters falling again by the year end comes in. But as far as the momentum goes, again copper 453 is what it is currently trading at. The momentum is possibly headed towards 460. But then I would be cautious in all the industrial metals. Again, one correction is due by the end of this year, so it is possible wait and watch approach till we resume 2018.
Right. We are approaching January in a few days, Prathamesh. The recent high of the dollar index was in the month of January this year, when we were at around levels of 104. Now we are 93.5, despite the optimism around the US tax bill passage, or even the the rate hike trajectory, which seems to be largely unchanged. There's no strength that the dollar index is seeing from the recent low of close to 91 that we saw. What's the longer term view on the dollar index, say over the next 3 to 6 months?
I think dollar possibly is headed towards 97, and then if it crosses 97, possibly 102 is what. So we are seeing for most of 2018, dollar would be on the strengthening side, and vis-a-vis is in inverse correlation with the commodities. I think all the metals would possibly see a correction into the first half of 2018. But then I would really take into consideration all the fundamental factors into play if you're talking about industrial metals per se, because it is already rallied by more than 25% in 2017. So it gives me a say in whether this rally will continue in 2018 as well. I am not so confident in almost all the industrial metals, but I'm confident in crude as such. The rally would continue. 62, 63 is what we're looking at as far as crude goes in 2018.
All right. So that's as far as crude oil is concerned. Then let's get your strategies as well, Prathamesh. You've got a buy. I think that's a more near-term call. Buy crude oil December contract, target of 37.90. The time horizon for this?
Yes, I think it would be possibly for 2 or 3 trading sessions. It is actually having a good setup, and with inventories continuously withdrawing in the US, it gives me a sense that the rally would continue. As far as WTI is concerned, possibly 59 or 60 also looks very much possible in the near term. And the Indian market 3,800 is what we're looking at. So I would be buyer on oil and every dips.
On precious metals, Prathamesh, we've seen gold that had slipped to almost 1240, 1245 levels. Now we are close to 1270 on the COMEX. I see you have a buy call here for February and a buy call for the March contract with different targets, 28,700 for February and for, I think this should be silver. This is at 37,900.
Yes, this is just a purely 2 to 3 trading session strategy, but take into consideration all set of factors wherein dollar strengthening, optimistic tone being set up in the US, tax overall being considered. I think precious metals would not be a counter wherein one would be on the long side for 2018, but take into consideration the portfolio per se. I think it would actually acquire say 8 to 10% of the entire set. So in that sense, I'm not so bullish in gold as well as silver. Near-term strategy, I think I would be buyer on dips in gold and silver. Momentum of almost 200 rupees from here on. 28,500 is what it's currently trading at. 28,700 looks possible. Whereas for silvers go 37,600 or 37,800, a possible move of 300-400 rupees is what we're looking at in both these counters.
As far as the currency goes, Prathamesh, what's the call there? Now we are close to at levels of almost 64, and we've strengthened a bit from the recent low of 65, 65.1. Where are we headed in the near term? Are we likely to remain in this range up until the budget or maybe the end of the fiscal year? Because the fiscal is an important peg as well. We've seen anyway the trade deficit numbers. Those have been a little adverse thanks to the kind of strengthening that we've seen. So what's the end of March sort of the view on the USD INR?
USD I think 63.5 and 63.2 are two crucial levels we are looking at as far as USD goes by the end of March. But budget would again be a situation where exactly similar to what we saw in Gujarat elections. I mean, volatility would be the way going forward as far as USD is concerned. But the near-term trend I think is on the appreciation side. 63.5 is what we're looking at.
All right. One question to both of you, gentlemen. Prathamesh, first to you. We rarely talk about cryptocurrency and the move there. But, you know, globally what we are seeing is quite interesting. I mean, one of the largest, the second largest, if I'm not wrong, e-wallet company in South Korea had adopted Bitcoin. So there was one adoption there. Then there have been talks around an ETF being floated. Futures has been introduced. So there are many touch points which bring about reaffirmation from and some kind of reassurance from the regulatory side that things might not be as bad as are made out to be. What's your view? Because the kind of volatility that we have seen over time has been immense. I mean, if you take a look at the range, we've recently had a high of $19,891, and now we are at $12,300. So we've seen a very big fall over the last 1 or 2 days as well, almost 25% to 30% fall overnight. Prathamesh, you go first. Your views.
I think no asset class will match the return that the cryptocurrency Bitcoin has given in whatever time frame you see even going forward. But I see this asset class as just where you purchase at a price and you sell at a higher price or you sell at a low price. It really does not have any sense of factors regarding to the influencing factor except the technology behind it. So I really do not have any sense wherein how and where this asset is headed vis-a-vis all the other asset classes and commodities, or for that matter equities per se. I am relatively haphazard in trading Bitcoins, but if you're really talking about commodity space, I think I would put my bet on crude or for that natural gas because this particular commodity has the least gains, close to 10% for crude, while natural gas has fallen by 25%. So I would put my money on the asset class which I would understand and not in an asset class which I really do not have any sense on. Although it is a talk of the town and talk of the world, but I do not understand this asset class.
Right. You seem to be more from the old school, Prathamesh. But, you know, my question to you is that, you know, given the kind of manic excitement that we are seeing around Bitcoin globally, do you believe that there is at all a chance of some serious flows getting dedicated to Bitcoin over the next 1 year, 1.5 years that could come at the cost of broadly equities or even industrial metals or crude oil for that matter? Could there be a chunk that could come at the cost of investable surpluses or liquidity going into other metals?
I think the liquidity is something which is possibly falling across the globe, and I think I would possibly give a rational explanation to this. Just to give you a sense, wherein crude oil prices, which was at 140, there was a surplus liquidity, and this liquidity was actually rolling across all the asset classes. But if it is specifically as Bitcoin per se, I think a lot of investable surplus would move out from commodities, equities, and then investable surplus move out from these asset classes and move into Bitcoin, because this asset class is really giving phenomenal returns. So in that sense, I think for returns per se, I would put my money in Bitcoin, but from an understanding perspective, I'm still a laggard in this particular asset.
Right. Prathamesh, let's speak about, what you feel about other metals like nickel. We've heard about the electric car theme globally that also led to quite a fillip and boost for prices. And it's been also the more volatile. I mean, whenever we hear about environmental stringency coming out of Philippines or Indonesia, we typically see the metal react. What's your view? I mean, in the morning also we were playing out a bite from Mr. R.C. Bhargav from Maruti, who's speaking about the foray into electric cars. There are other bigger companies, Mahindra & Mahindra, who's speaking about the same. What do you feel about prices back home in India? Do you think that for the next year, this theme could be the key driver behind nickel?
Pranay, I think the story of nickel in electric cars is possibly a long-term story, maybe 5 years, or in India per se it is 10 years. This factor would be a play going forward. But just for a year perspective, wherein we are heading into the new year, I think it is all from Philippines. Whether the ban on mining, which is still there effective, would continue or do not continue, and that would be the driving story going forward as far as nickel goes. But then nickel, the electric car story, I think this would possibly catch up from a longer term time frame. People who are really looking from an asset class wherein they put money and they keep silent on it and possibly remove investable surplus after 5 years. So that sense, nickel, I think buying on dips is an advisable strategy, but it is a very volatile counter. I don't really advise to be hold on this counter for a very long time. I think if you're just talking at levels per se, I think 770 is what it's currently trading at. Immediate near-term targets would be around 810. But frankly speaking, I would avoid nickel. It would go on both the sides. It can possibly come down towards 730 or for that matter 700 as well.
Right. At that point, gentlemen, we are going to wrap up our discussion at this for dearth of time, but wish you a very Merry Christmas and a happy long weekend as well. And that's all the time that we have on this edition of the Commodity Trade. More news and updates continue on the other side of a very short break, so stay tuned.